Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video I said gold was going to go up and it's up $200. Okay, again I was right. So let's see what will bring in the coming months. I have my Excel, the gold forecaster index indicator, and we are going to fill in all the different indicators, and then we sum them up, and then we have our index. So technicals. This looks like, yeah, last time I said up, down, up, down, up, down, and now it's going to go up. Okay, I think there's still a leg up to 3,800. Okay, from a technical standpoint, this is a 1. Okay, next is the gold forecaster index, which is based on leading indicators. We see that the latest data point is pointing up. And this is based on these indicators. Trade balance is probably one of the most important. This was getting more into deficit. So this is also a plus. Taylor roll rate. Taylor roll rate is in the plus, it's above 0, so this should be positive for gold. On to the misery index. Now this is starting to bottom out. We know that jobs are not great. We also know that inflation is headed higher. So this is a 1. It's bottoming out. Real output is, let's see. Actually, it's headed back down in Q2. So real output has improved. Yeah, I can't give this a plus, so this should be, let's give it a 0 now. Gold ETF demand. Yeah, this is clearly positive, it's headed upwards. ETFs are now starting to buy gold. GLD flows, yes, GLD flows are also on the upside, as you can see here. Inverse head and shoulders. We are clearly not at the top yet. And by the way, this is typically a 30% increase in gold. So I expect another 30% increase that would give us 4,500 gold. So 1, COMEX flows. Well, this is headed higher again. You could say this is maybe flat, but it was flat the last time. It's up a tiny bit. I'll give it a 1. COMEX deliveries. Yeah, it's also on the up now. So I should give it a 1. LBMA flows, I don't know yet. We don't have data, but the long-term trend is clearly bottoming out and going up. 1. China deliveries. Yeah, this is one of the indicators that are going down. China gold demand is going down. It is what it is. You can clearly see the trend is headed lower. So that's not good. That's a -1. India imports. India imports, that's the gray line, is, well, it was up last month, so I could give this one a flat. SHFE gold flows. Yeah, this is clearly up. So on the Shanghai Futures Exchange, we have positive gold flows. Central bank demand. There is still buying from the central banks, but less. It's not. It's not like they're selling, so it's still a one. China central bank buying. Where is China central bank buying? Okay, so they are still purchasing small amount, but the customs data shows us that it's around this level, 20 tons per month, not 2 tons per month. So it's much more than that. So this is clearly a one. US mint sales. Where is the US mint sales? Here. Yeah, clearly nobody is buying. So this is 0 or -1. Before we go further, let's also take a look at some other data. There are some new charts here. The amount of gold percentage of reserve assets is headed higher. Portfolio allocation of gold is still at very low levels at 1.5. So we are not at the top yet. This can easily go from here back to 8%. So the gold bull market has not started yet. Same with the gold miners. Allocation is still below 0.5%. We were at 1.3%. So this is clearly not the top yet. Okay, let's continue. Shanghai gold premiums. Where are the Shanghai gold premiums? The Shanghai gold premiums, yeah, it has gone a bit negative, but it's not really like this. So I would be neutral on this. Shanghai gold premiums, neutral. Upmix gold premiums, yeah, you can already see these premiums are very low. Silver premiums are very low. Where is the Upmix gold premiums? Yeah, 2%. You can buy gold coin at 2% premium. Very cheap. And that's typically not a good sign because that means we should be in a top. This is good. This is the bottom. This is not good. This is typically a top, but yeah, this is only retail. Retail of the West, negative. They do not want to buy gold coins. COT long positioning. Yeah, the COT report. We can actually where is it? There's so many charts I don't even know where to find it anymore. COT long positioning. Yeah, here. Agree. Okay, so you can see that there are a lot of longs right now, maybe too many longs, but the trend is indeed still up. So that's the trend. The trend is up. So this should be one. Open interest. Open interest is bottoming out, so we have low volatility. That low volatility will eventually go back up with high volatility, and then gold will go up. So this is a bottoming out phase for open interest. I would say one because we had a spike in open interest lately. Seasonality is clearly a one. We are in September. Seasonality is, well, actually, this is a 20-year ending 2024. It should be flat, actually. But previously, September should be a good month. But the latest chart says that we will be a bit flat. This chart, however, says until 2022, and we are going up in September. So there are different charts, but September normally is a good month for seasonality. Real interest rates. That's this chart. Real yields are starting to bottom out and headed upwards. Okay, this is upwards. Okay, the latest data downwards, but the trend is starting to rise. This blue line is also, yeah, still in an uptrend. So I would still say one. Gold miner sentiment. Let's see. Gold miner sentiment is currently neutral. Okay, not too bullish, not too bearish. It is starting to go down, but let's say we are currently neutral. Currency in circulation. Currently in circulation, that is, where's my chart here? So clearly, currency in circulation is headed upwards. Money supply M2 is also upwards. So that's one. No, we are not going down in money supply, we are going up. So gold likes higher money supply. 30 to 10-year yield ratio. That's this chart. Clearly headed upwards. Latest data is soaring upwards. Okay, this was a tiny bit lower, but the trend is upwards. And that means gold will go higher. So a lot of green, actually, Google Trends. How to buy gold. Okay, I don't know what this means. It went up and now it's going back down, it seems. So the trend is going back down. I would say flat then. Let's take it flat because the sentiment has changed back down. They don't want gold anymore. Debt to GDP, we know that debt is rising. So that's one. Near-term forward spread. Yeah, this website has not been updated for already 2 months, so you need to calculate it yourself. But I think it's -1 right now, so somewhere here. So we are still bullish. You can calculate this with this. 3.18 minus 4.2, that's -1. Okay, so we are still here at -1, and that means we should go back to positive at some point, and that coincides with higher gold. So the slingshot effect is still coming. Rate cuts, yeah, we are going to have lots of rate cuts. So rates will probably be cut in the coming years. And that coincides with stocks falling or correcting and gold going up. And you can also see that on the proxy Fed funds rate estimate and also the 2-year yield, which is falling off a cliff. So rate cuts will come. I'm pretty sure about that. Look at this. The proxy Fed funds rate is getting below the Fed funds rate. So rate cuts are coming. 1. Deposit FRBNY. So deposits looks like this is flat lately. So I'm going to put 0. It's not negative yet. Borrowing fee. Let's see if we have some movement there. Borrowing fees. Actually negative. No, borrowing fees go to 0. That's not bullish. You want to see a spike in borrowing fees. So I would say minus. Gold futures curve, I have checked it, it's still pointing up. So that's bullish. Fundamental gold price was actually bearish. I don't know how they calculate it, but it's pointing negative. Let's see. The fundamental gold price is currently lower than the gold price. So they think that gold is going to drop by $100 to $200. Weird, right? But it is what it is. They calculated that the gold price is overvalued now. So -1. Yardeni target. I don't think it has changed. He still thinks we are headed to 5,000, 4,500 by next year. So 1. Geopolitical uncertainty. Not sure. Let's see. Has come down a bit. Here as well has come down. It looks like it's the spike has made its way downwards, but it's still elevated. It's still elevated. So what I can do is give it a flat. It's not rising, but it's not negative yet. So deficit, yeah, deficits were indeed higher in the latest report. We will look at that. So this is now the indicator, and way that indicator says that we should be flat. Yeah, what should we think about this? So here is it is also flat, and here also flat. Yeah, that's the assessment right now because of the lower demand here. So don't expect gold to go up too much, I would say, even though the gold forecast index is still positive. We have could also be that my rating is a bit too high on this number on the China gold demand and India gold demand, because if I do it like this 5, then this goes up. Okay, so it's the weighting. Probably if I do 2, for example, yeah, and then these numbers change. Okay, and the weighted is the sum of all of these numbers. Yeah. Looking at the heat map, there's a lot of things going green, but 2 of these things going red. Yeah, the fundamental gold price is the most important one here, has gone red. So yeah, this is a pretty important indicator that they say that it's going to go red. Yeah, what to say about this? Maybe this is a little bit too euphorical on gold. I don't know what to think about this. Let's look at some other things first. Central bank balance sheets. They're still doing QT, but treasuries are flat, so they are not selling treasuries anymore. That means that yields probably go up. Here the repo was getting very low, and the treasury is also lowish, but there's still some cash left. Bank reserves still okay. Money supply is rising, so this is good for gold. Inflation is normally it's rising, but looks like it's flat lately. Trade deficits. This is June. And July, we see an increase in the deficit. Yeah, both the services went down and also the goods went down. So this is a double trouble, more deficits. Let's see the July numbers. Actually, these charts are improving. The blue charts are improving, but the trade balance went down. So it's actually pointing to less deficits. Yeah, you don't want to see this. This should be the trend if you want gold to go higher. So this is also not a good sign. Um, Price index up, that's good. Imports are higher in price. Okay, that's also good. Q2 imports down, both down, that's a lower GDP. And here, trade deficits rising, coinciding with the dollar going down. So it was a good month for the trade deficits. Higher deficits means US dollar goes down and gold going up. So let's see if this trend can continue this way. That would be good for gold. Capacity utilization. Um, Trending down a bit. Weak economy. And then some blog posts. So we are currently here, and there are several scenarios. The bear case saying that we go below 3000. I don't see this happening. Okay, so it needs to be either flat or continuing to rise. I expect gold to go higher by next year in these scenarios. Okay, so 4,000, 4,500 would be the base case. What happens here? There could be some volatility. Okay. Sprott holdings updated. Could buy Equinox, wheat and precious metals. SSR Mine doing great. And this, I think this is a weird one to buy Highcroft, but that's what Sprott did. And sells are First Majestic, overvalued. This is also overvalued. This one is already sold. Newmont fair value. So you can look through this table if you want. Gold vs the VIX. We know that the VIX is starting to rebound, so gold should be headed higher. Yeah, seasonality should point to an upward trend in the VIX and higher gold prices. Yeah, Danny is also bullish on stocks apparently. So stocks can go up another 10% by next year. Not a lot, but it's good to still stay in the stock market for now. I know it's overvalued, but apparently with money supply increasing, then there's liquidity and stocks will keep on rising. There's no fundamentals behind it, but it will go up anyway. Central bank demand is indeed falling a bit. So it's not that they are selling, but they are not buying as much. So we're still positive, but take this into account. China demand down, central bank demand down. It's not as good as before anymore. But there are also positive things like this. Jobless job openings are diving. So tomorrow we will have the payroll numbers, and we will see if it will bullish or maybe it will be bearish. We don't know yet. But looking at this chart, I guess it's going to be bearish and good for gold. So what does What does Goldman Sachs say? They say that gold can even go to 5,000 in a few years. If the market sells 1% of the US Treasury market, then we will get to 5,000. They also said yesterday that they think that gold will be well above 4,000 next year. So that is actually the target, also my target, that we get to above 4,000 next year. So to prepare for this, actually it's very easy. You buy gold miners. So at 4,500, I'm touting for these three ones, Golconda Gold, Jaguar Mining, and Soma Gold, basically. Very easy operations. They already have their mills. Each one of them has their mills. Okay, they don't need to build any new plants. It's already there. So they just need to fill up these mills by developing new mines or by mining more ore or bringing the mines back online. For example, Jaguar Mining could bring the second mine back online and then fill up the mills, and you will get this upside. That's 300%. 300%, that's a four-bagger if we get to 4,500 gold. And it looks like Goldman Sachs thinks that we will get there in this research report. So, what is the conclusion? 4,500 may look very high on this chart, but I think we can get there. Now for next month, I actually think we will be flat. As we have seen here, the weighted gold forecaster index says that we will be flat. Okay, so this could maybe be a bit too bullish. So I think this is probably going to be a correction phase. It has to be 3,500 or flat based on the data that we have here. Or my ratings are wrong. That's also a possibility. So I need more data to see what my ratings need to be. But I'm especially worried about this one. Fundamental gold price is negative. It could be that by next week this turns back positive, but today it's negative. You have seen it. So I expect a bit of a correction. It's up too much. A little bit of correction next month, and then we can get higher. Okay, and I'll see you next video. Bye.